Welcome everyone to a new episode of Finance in Focus. We are the podcast team from the ESFS Student Finance Society, and we are very excited to bring you in-depth insights on the latest economic and market developments. Building on last week's insights, today we will dive into recent macroeconomic developments, explore current financial market trends, and look ahead to the key economic data releases scheduled for next week. I am Laia Marsal, and joining me today we have our amazing team members.
Hello, I'm Laura, and I will cover the most recent global and macroeconomic perspectives. I will also focus on how commodity prices are influenced by inflation and supply chain disruptions.
And I am Tony Vidal, and I lead our Insight Spotlights discussion exploring a major financial trend in depth. I will also provide the week ahead, offering insights into upcoming economic data releases and other key events that could shape the markets.
We've got a full agenda ahead, so let's get started. Well, to start things off, let's welcome Laura, our go-to expert on macroeconomic events.
Thank you, Laia. It's a pleasure to join you.
Well, let's begin with global trade. There's been a sharp intensification of trade-related developments this week, and it seems markets are already responding. Could you begin by outlining the key changes that have happened?
Yes, certainly. So, first of all, trade tensions have risen markedly in recent days. On April 10, 2025, the U.S. administration under President Donald Trump implemented a new round of extensive tariffs. These include a 145% tariff on imports from China and a 20% tariff on goods originated from the European Union. In response, China introduced a retaliatory measure imposing tariffs of 84% on U.S. exports. These actions have triggered heightened market volatility and are contributing to mounting concerns over the possibility of a global economic recession.
Well, those measures are indeed quite severe. The scale of the tariff suggests not only a deepening of trade hostilities, but also a profound risk to global growth. Given these developments, are central banks beginning to adjust their policy stance?
Yes, clearly they are. We're seeing a policy divergence between the major central banks. The European Central Bank, for instance, reduced in benchmark interest rates by 0.25% on March 6, bringing it down to 2.75%. This marks the ECB's sixth consecutive rate cut in recent months, and the move is intended to address the slowdown in economic activity and mitigate the risk of recession within the Eurozone. Conversely, the Federal Reserve has thus far opted to maintain its current interest rate levels. This indicates a more cautious, data-dependent approach in the face of significant global uncertainty.
Yes, it's a notable contrast. Europe appears more proactive in its monetary response, while the United States is exercising greater restraint. Shifting now to geopolitics, how are broader conflicts and international tensions influencing market dynamics?
Okay, so geopolitical tensions remain a significant source of risk to global markets. The ongoing conflict between Ukraine and Russia has led to the imposition of further sanctions on Russia, particularly in the energy sector. This has disrupted supply chains and contributed to heightened uncertainty in global energy markets. Simultaneously, rising tensions in the Middle East have impacted on all markets. Recent price declines in crude oil can be attributed in part to fears of weakening global demand, compounded by the ongoing trade disputes between the United States and China.
Indeed, geopolitical uncertainty appears to be weighing heavily on both investor confidence and energy markets. What effects are we seeing in the foreign exchange and commodity sectors?
Okay, so currency markets have shown sensitivity to these developments. As of April 9, the euro is trading at approximately 1.105, reflecting investor concerns regarding the eurozone's economic prospects. The Japanese yen, traditionally viewed as a safe haven currency, has appreciated slightly, currently trading at 145.33 yen per US dollar, as investors seek security in more stable assets. On the commodity side, gold prices have risen sharply. Futures reached 3,087 per ounce on April 9th, as market participants move towards safe haven assets aimed bordering financial uncertainty. In contrast, oil prices have declined significantly, with Brent crude futures falling below $60 per barrel, and this drop reflects ongoing concerns about subdued global demand and the economic fallout from heightened trade and geopolitical tensions.
It's a comprehensive and sobering picture. On that underscored the extent to which economic, political, and market forces are interlinked. Laura, thank you for your thought analysis and for helping us navigate these complex dynamics. Next up, let's bring in Tony, who will be talking us through our Insight Spotlight segment. Today's episode isn't about a breaking headline or a single market move. Tony, today's episode is about a shift, an atmosphere, right?
Exactly, Laia. Everyone's right now focused on the new tariffs announced by President Trump, but as Ray Dalio said, tariffs are just the smoke. There are other fires we need to pay attention to. So today, Laia, let's talk about a little bit about what's really happening right now. Firstly, I want to talk about the smoke, the obvious. President Trump announces new tariffs as a patriotic speech. The narrative of protecting our own returns. Immediate reaction, stock markets down, gold rises, investors get tense, but we've been through this in 2018. This has a different texture, Laia. Now, it's not just about trade, it's about trust, about blocks, about preparation. Secondly, the fire, the important things. Look at the global map, Laia. You don't need to be a historian to feel something familiar. The US invests billions in bringing back its factories. Europe launches its own chip law, its energy autonomy agenda, even its military Airbus. China, for the other side, accelerates its decoupling from the dollar, strengthens ties with Russia, Africa, and the Middle East. It's no longer just about competition, it's about disconnecting, and also that historically has always brought tensions. Let's say economic barriers, commercial nationalism, progressive isolation, and a divided world. Laia, doesn't this remind you of something? Now, the pattern is the same. 100 years ago, Germany was retreating and starting to rebuild in the midst of sanction and trade tensions. Every country rearmed, economically, ideologically, and militarily, without trusting each other. The result, we all know it. Okay, it's known. Today, we see similar signals. The US is protecting itself. China creates its own financial system as a barrier. Europe talks about strategic autonomy. Are we walking towards a multipolar world with close blocks and known rivals? Today, like then, each country is reinforcing itself, not as a direct threat, but as a reflection of the fear depending on others. And without realizing it, Laia, we could be living in a kind of unconscious preparation for a third world war. Not with tanks, obviously, but with technology, cyber defense, computers, rare minerals, and digital currencies as weapons. This is not a prediction, of course not. It's a structural warning. History doesn't repeat itself, but it rhymes. And this melody, Laia, we've already heard it before. But what about us? So what do we do with all these as investors? First, understand that investment logic has changed. It's different. It's no longer enough to look at balance sheets. We must be looking at geopolitical positioning. Where does it produce? Which country controls its supply chain? Who are its allies? What are the interests behind them? Second, remember that what big players are doing at the moment. While retail investors panic, Larry Fink buys. On Pershing Square accumulates strategic liquidity. Ray Dalio doesn't see this as a threat, but as a paradigm shift. As always, the ones who understand the cycle doesn't run. They position themselves.
All right, Tony, I have to say, this is giving me goosebumps. Did you happen to start your day with the BBC documentary?
Something like that, but if there's one thing I've learned, is that markets don't move just by data right now. They just move by moods and by trust. And the current one smells like a silent, dangerous reconfiguration. This week, moving into the week ahead, this week the markets have been jumping like foam. But the foam floats on top while the water moves below. Oracle and Micron will tell us if the chip fever is still profitable. The core PCE index on Friday will determine if the Fed can breathe, and consumer confidence will be the thermometer for how much noise American families are feeling or hearing. But again, don't just look at the chart, look at the structure that supports it.
Tony, I thought this would be another tariffs episode, but we just went through geopolitical, financial, even a bit historical data.
What can I say? I like to keep things spicy. Let me leave it like this. The world right now is like a ship changing direction in the fog. Some are panicking, others are sleeping. But the smart ones like they are watching the compass, focusing on their own vessel and on what they can control. And quietly, very quietly adjusting the sails, because when the wind clears, they will be already ahead of the curve.
That's a powerful image. You do have a talent for delivering those quotable lines, don't you?
Yes, I guess I like metaphors, especially in a podcast. But yeah, I do really like it.
Well, here I go. If the market screams, listen to what it doesn't say. Stay sharp and stay curious. Thank you, Tony, for that valuable insight into the latest financial developments and what to expect in the coming week. Now, turning our attention to something a bit more local, let's talk about how the ESADE Student Finance Society is opening doors for students to enhance their finance and investment expertise. We are pleased to announce that we will be taking part in the Amplify Me Spain Multi-University competition in collaboration with UBS. This event offers a unique opportunity for students from across Spain to take part in a finance accelerator simulation, a live experience designed to replicate a real-world roles in financial markets. Whether you're interested in sales and trading or asset management, this simulation puts you directly in the position of a financial professional. Participants will manage a virtual portfolio of $20 million in U.S. equities, making live market decisions in a fast-paced, immersive environment. It's an excellent way to develop practical skills, gain a deeper understanding of global markets, and experience the type of work professionals in the finance sectors engage in every day. One of the most valuable aspects of this experience is the opportunity it provides for future career development. High-performing participants may be referred for further training and career opportunities at UBS. The event will take place on Thursday, the 24th of April from 2 to 4, hosted online via Zoom. If you're eager to gain insights into the financial industry and stand out in the future applications, this is an outstanding opportunity to get involved. We look forward to your participation and hope to see many of you there. So that brings us to the end of today's episodes of Finance in Focus. We've explored a world shaped by trade tensions, geopolitical uncertainty, shifting central bank policies, and deeper structural changes in the global economy. From macroeconomic developments to market sentiment and strategic investment thinking, today's discussion reminded us that staying informed isn't just about headlines. It's about context, cycles, and long-term perspectives. We also highlighted an exciting opportunity for students, the Amplify Me Spain Multi-University competition in collaboration with UBS. It's a chance to apply your knowledge in a real-world simulation and take a step forward in your career. As always, staying ahead of these shifts is key to making informed decisions. Thank you for tuning in, and we will see you next week for more insights and analysis.